Hello and welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and today we are here to talk about the top 3 stocks for the month of September. And I gotta say, I cannot believe that we are already in the 9th month of the year. It has been a wild ride this year with the markets, so really a roller coaster, but time flies when you're having fun. So with that, I also just want to say thank you to everybody who has followed along with my journey, everybody who has subscribed to the channel. We are coming up on the 1-year anniversary of my channel. So last year in September, at the tail end of September, is when I started my YouTube channel. I cannot believe that we are already here 1 year later. And so it has been a great journey. And that is thanks to all of you who have subscribed and supported me. So just as always, thank you so much. With that, we're going to be talking about Robinhood, Microstrategy, and HIMS and HERS Health. All 3 of these stocks have massive potential. And when we talk about the technicals of these stocks, they are all sitting at pretty great buying spots right now. Before we talk about the stocks, however, we're just going to talk first about the sentiment in the markets and kind of what we could expect to see this upcoming month. So as you can see here, I have yellow for cautious, green for bullish, and then red for bearish. We have 2 greens, 1 red, and the rest here being yellow. So going into the month of September, I am being a bit cautious. I am more bullish than bearish, but right now the markets are a bit shaky. So first, just when we look at the earnings, I have yellow to green, so more bullish, cautious this month because all the tech earnings are out of the way. So we had the big players around tech report this last month in August. Going into September, we don't really have a ton of players here. Now we do have GameStop on the 9th. This is not a stock I cover. It is just a meme stock, but with overall sentiment and what the Federal Reserve is expected to do next month, there is the possibility that GameStop, if they do have an earnings that beats expectations, or if somehow they just come out with a great quarter, any great news, and it sparks a run-up in GameStop, we could see a run-up in the entire technology sector and all meme stocks and risk assets, because when the Federal Reserve does cut next month, or I should say this month now, later at their FOMC meeting, if that does happen, that will be great for risk assets. So this is a little bit of a bullish factor that could happen. I'm not really bullish on GameStop myself. Again, not a stock I cover, but it is an interesting stock to look at. Later in the month, we do have Costco. So this is another big player, and Wall Street is expecting their largest revenue ever. So this will come after the rate cuts, but this could be an extra bullish spark for the markets. Now, when we look at economic data going into this week, we do have some fear, uncertainty, and doubt around the jobs numbers that are coming on Thursday. And then next week, of course, we have more around inflation. All of that is going to be huge. So right now I am sitting in the levels of caution because, again, the Federal Reserve is expected to cut this month in September. But this week, if jobs numbers come in bad and if inflation numbers do come in bad next week, this could bring the projection down. And I could see a lot of fear, uncertainty, and doubt this Friday if the jobs report is bad, because as we know, Donald Trump recently fired the previous head for the Bureau of Labor Statistics. And so if by any chance this report comes in bad, this would really look bad for the president and could cause some fear. Now, when we look at historical data, I have seen the bears online talking all about how September is historically one of the worst months in the market. If you just type in September stock market on September, the first thing the AI overview says is, while it is not possible to predict the stock market with certainty, historical data shows that September is often the weakest month for stocks, a trend known as the September effect. So a lot of bears are talking about this, especially with the recent sideways and downwards movement we have seen in the markets, because as we know, the major indexes have been on this crazy rip up, but in the last couple weeks, things have went a bit sideways, and on the major indexes, we have trailed down on both the relative strength index and a bit on the MACD also. So when it comes to historical data, I am being cautious and a bit bearish there, but I could also see the flip scenario. You know, when it comes to the market sentiment, oftentimes the market will do the opposite of what everyone is thinking. So oftentimes when you see bears all online and you see all these bearish thumbnails pop up on YouTube, just remember that bears get paid to spread fear, uncertainty, and doubt. That is what gets their channels going. Just like the bulls are paid to bring out confirmation bias. That's why I like to be honest and just give you guys a true opinion, because no one really knows where the markets will go. I have been extremely bullish this entire year, but a lot is lingering on the decision of what the Federal Reserve is going to do later this month. So going up to that event, I am a bit cautious, but overall I am still bullish. So again, cautious with bullish, because again, we have been in a bit of a sideways trend on the major indexes, but we are still moving up, and historically the markets always push forward. So I am very bullish on the markets for the long term. It is very hard to bet against the markets because they always continue to push up, and we have had some semi-confirmation from the Federal Reserve with what Jerome Powell said. And then we did have Christopher Waller speak last week, and he did say that we could potentially have 3 rate cuts. And so with that, we are going to talk about these 3 stocks again: Robinhood, Microstrategy, and HIMS and HERS Health. As always, this is just my opinion and never financial advice. I always recommend doing your own due diligence before making any financial decisions. And I really do recommend that. Go out there, watch some other videos, read some books, because the more you learn, the more you earn, right? So with that being said, we're going to first look at Robinhood. And Robinhood this year has been on this crazy upwards bullish trend since April. So around the lows at Liberation Day, this stock was valued around $35. We are currently at 103. We have went a bit sideways in Robinhood, just like the major indexes. But personally, that doesn't concern me, because with Robinhood, this stock should only continue to grow. This is where it's important to talk about growth stocks versus value stocks. A growth stock is a company that accelerates in price because their earnings are accelerating, because their revenues are getting better, because there are a lot of bullish catalysts behind that company. And Robinhood fits into all of those categories. So just when we look at their earnings, they did have their best earnings ever at the last quarter for 2024 with $1 billion quarterly. Now, the first 2 quarters of the year did come down a little bit, but Wall Street is expecting for Q3 to be better than their biggest quarter ever, which was Q4 of 2024. So that is massive. And Robinhood in general is an amazing company. They are positive when it comes to their balance sheet. They are earning more revenue every single quarter. And this last year alone, there have been tons of catalysts with Robinhood. So they are really going international, introducing EU tokens. Their customer acquisition continues to grow. And then we have this bullish catalyst coming this month on September 9th and 10th, and that is the 2-day showcase where they will unveil new cutting-edge technology and advanced trading tools. And these Hood Summit events are important because they show off their new technology, but also they could talk about some of their guidance for the future, and overall just a positive event, because this is a showcase all around Robinhood, held by Robinhood. So anytime you see a company doing events like this is always positive. This brings more eyes onto the company, and investors always like to get future guidance and see the CEO and the chairman and all these different members of the board be vocal, be willing to talk about their company, showing that they have nothing to hide. So Robinhood looking very bullish with everything they have announced this last year. September 9th and 10th, we may get even more bullish news in Robinhood that could spark the price even higher up. And with Robinhood too, if we're just talking about the future growth potential, eventually this company will reach into the S&P 500, but it has been snubbed time after time. So we saw once again Robinhood got snubbed with the shuffling of the S&P 500. Eventually this company will definitely be in the S&P 500. And when that comes, there will be a lot of inflows from the major index money that is within the S&P 500. So I'm very excited for when that day comes. But right now, I see Robinhood as a growth opportunity, but it has a little bit of a value opportunity in it, because although most of the growth is being realized, it still hasn't been realized by the major index of the S&P 500. So when it does get included there, that will be massive for the stock. And then when we just talk about your shares outstanding in this company. We have talked about this many times here, but Robinhood is buying back Robinhood stock. So the company is doing a big share repurchase program. They are buying back $1 billion worth of shares. It is all happening this year. Currently, there are shares outstanding at $773 million. Robinhood is going to be buying these back. This is significant because the outstanding shares will come down, and this will make the overall stock look a lot more appetizing. As the float comes down, your shares will become more valuable. So that is huge, and that is all that really has to be said with Robinhood is buying Robinhood. So Robinhood is bullish on Robinhood, and so am I. The growth in this company over the last 10 years has been insane. They have really changed the financial landscape, and I could only imagine that the next 10 years with Robinhood is going to be even crazier. So $100 is a psychological mark. Some may see this as overpriced, and yeah, you could say it is a bit overpriced, but with Robinhood, you really are paying for the future growth, because this stock, again, a very volatile, amazing growth company. So a lot of true potential, a true blue chip stock, but it moves up quick, as we have seen throughout this entire year. So if the markets are at all a bit bloody this week, I will be definitely looking at adding more Robinhood to my portfolio, especially if it reaches right under $100. But I do think that we will bounce off this 50-day moving average, and that is just in the short term. So the short term, anything can happen, but over the long term, I do know Robinhood will continue to accelerate in growth and continue to accelerate in price. So I'm very excited about Robinhood, which now brings us into our next stock, which I am also very excited about. We just talked about it in yesterday's video, and that is Microstrategy. And just like we're talking about how Robinhood has changed the financial game and really been an innovator, well, so has Michael Saylor with Microstrategy. So this company right here is so famous because of their CEO and the strategy he implemented within this company, which is instead of having cash on the balance sheet, change that to Bitcoin. So they have a massive Bitcoin reserve. This company was also recently snubbed out of the S&P 500. So when the S&P 500 inclusion does happen for Microstrategy, this will be also massive for all the inflows coming in. But Microstrategy has this massive Bitcoin reserve on their balance sheet, this massive flywheel strategy where they continue to add more Bitcoin to their balance sheet, the largest holder in the entire world. And so many companies have now followed exactly what Michael Saylor has done with this company. So a true legend in the financial industry, really has changed the landscape and really has helped with the mass adoption into cryptocurrency, getting a lot of institutions to follow alongside what he is doing. But as we could see here, their last earnings report was their biggest ever. So they had their greatest beat, and that is because they were officially able to add the unrealized gains of Bitcoin to their balance sheet. And so it's massive that they could do this with their reporting. And going forward, we should continue to see massive earnings from Microstrategy. These are unrealized gains, but many look at Bitcoin as cash essentially. Again, they are holding Bitcoin instead of cash just because cash continues to slowly lose value while Bitcoin continues to gain value over time. And so I see this positive trend continuing with Microstrategy. Again, a ton of companies are following right alongside what MSTR is doing. And there is some fear, uncertainty, and doubt with some investors about dilution, because with Microstrategy, they want to continue to buy Bitcoin. And so right now, there is only 263 million shares outstanding. So even if Microstrategy does dilute a bit to buy more Bitcoin, it's really not too bad when we look at how many shares there truly are, because that is a pretty low number there, just 263 million. Again, we were talking about Robinhood buying back their shares, and they had 700 million. So this company has a float just 263 million. I think that is great, especially because of all the potential within the company with their Bitcoin holdings. And so right now, Microstrategy relatively cheap to where we have seen it in the past, currently sitting at 334, but we had a peak of $500, and right now we are at a critical spot. So again, like we were talking about the markets and how much fear, uncertainty, and doubt there is right now, when I buy into stocks, I want to buy them at great buying opportunities. I don't want to buy at overvalued levels in case the markets do get shot and go bearish for the month of September. I am bullish myself, but cautious, like I say, because anything can happen. And so when I look for great buying opportunities, I want the technicals to line up exactly how Microstrategy is lining up right now. We are right under the 200-day moving average, which is significant because when we look at the past in this company, we could see that every other time that we were at that 200-day moving average, we did bounce off of that level. We have the potential to bounce off that level again, especially with where we are sitting at on the relative strength index and on the MACD. So low on all the indicators. And if the Federal Reserve does indeed cut this month and we do see sentiment push a bit more bullish, all of risk assets should have a major bounce, and Microstrategy positioned perfectly for that bounce. Again, anything can happen in the market, so I am hoping for a bounce here. But again, I don't have a crystal ball, so anything could happen. We could drop more below that 200-day moving average. But if we were to double top here, to say if we were to drop, say this month is bloody for Microstrategy, say the rate cut doesn't come, well, I am still excited because I never over leverage myself. I always have some cash on the sidelines, and I always want to add to great buying opportunities. So I think right now is a great buying opportunity. If by any chance we do see the markets be bloody this month and see more of a trail off, I could see Microstrategy dropping to this level here. Very unlikely, especially when we look at the historical data, but anything is possible. But I am so bullish on Microstrategy for the long term. Even if this happened, I would be very excited, and I would only add more because eventually the Federal Reserve will cut. And again, the bears are paid to sell fear, uncertainty, and doubt. And so when moments like this occur, when there is something in the markets, this is when the bears roar the loudest. But as we know historically, it is best to buy on the dips. And when there is fear around you, that is when you should be greedy. And when everyone is greedy, that is when you should be fearful. So there's a lot of fear. And this is why personally I am adding to this opportunity of Microstrategy. This stock is very volatile, and really anything can happen around all risk assets this month. And this company being the largest holder with Bitcoin, I believe that right now Microstrategy is undervalued at these current levels. And so now that's going to bring us into our next stock, which also looks fantastic when we talk about the technical analysis, and that is HIMS and HERS Health. Another great growth opportunity with a lot of volume and volatility associated with HIMS and HERS. So this has been one of the top running stocks for this last year of 2025. The volatility has been crazy. As we can see, this stock has experienced some massive swings, but what is really important right now is where we sit at. Just like Microstrategy, we are right at that 200-day moving average. And so just like Microstrategy, also the last time we were at the 200-day moving average in HIMS and HERS, there was a bounce off that level, just like the times previous. So this stock consistently trades above the 200-day moving average, and rightfully so, because this company has accelerating earnings. So just like Robinhood being a growth play, this company, their customer acquisition is amazing, their sales are amazing, and we could see their earnings have consistently accelerated over time. They also have a positive earnings per share. So as you could see, they did miss revenue expectations in Q2, but still at a positive 17 cents earnings per share, which is massive in the markets because there are so many companies out there operating at a net loss. But HIMS and HERS Health at a net positive, and they actually have a pretty reasonable price to sales ratio. So a lot of companies right now have a lot of their ratios being out of whack when it comes to P to S or P to E. And, you know, many times that is just the way it is with the markets because the markets are always looking forward. But anytime you see one of these ratios actually be decently down to earth, which their price to sales is, that is actually a positive. Price to earnings and price to sale just kind of show you what you are paying for that company in price too. So the P to E is a little bit overvalued, but the P to S is right about where it should be. And this company, again, is experiencing a lot of growth. So despite missing expectations from Wall Street for Q2, this company is still doing fantastic. And we could see that there has been strong 88% year-over-year growth, and they have had European expansion. So a lot of true intrinsic value behind this company. This company offering a lot of health products. We can see here they have solutions for losing weight, regrowing hair, sexual reasons, tackling anxiety, and having more smooth skin. And this company promotes skipping the awkward doctor visit, which you better bet a lot of customers want to do that. It is just easy to go with HIMS and Hers Health. It is an easy solution, and we can see that they are trusted by over 2 million customers here. They have their ingredients sourced from the United States. And again, just like when we talk about regrowing hair, it is a lot easier to take a pill than it is to have to go get a hair transplant. And if you are embarrassed by going to the doctors, you could avoid a lot of that with HIMS and Hers Health. So they provide a lot of true value here. They have been around for a long time. They are FDA approved. This is a true blue chip company. And again, just when we return to their technical analysis, right now the markets are a bit confused. That's why I wore the red shirt and the green tie, because really it could go either way right now. But with that, I want to position myself into great opportunities, great growth plays that are sitting at value spots. And that is exactly where HIMS and Hers Health is, right at that 200-day moving average, low on the relative strength index, and then also looking like we should see a bullish cross very soon here on the MACD. So again, anything is possible. Just because we are right at this level doesn't mean that we can't move alongside it for some time, but I think a lot of the blood has already happened. I don't see us moving under this 200-day moving average, especially again when we look at what the underlying company is, because the market's right now feeling some fear, uncertainty, and doubt. That is why I am staying cautious. But over the long term, when we look at what the companies we are truly investing are, well, nothing has changed about the fundamentals of the companies that we have covered today, just some fear in the markets, but the valuations have came down, and this is why I think that there are great buying opportunities within the market currently. But I would be curious to hear what everybody else thinks in the comments section below. So as always, I really love to hear from you guys. So please drop a comment. Let me know if you are invested into any of these three plays or any other plays, and where you sit at when it comes to your sentiment. If you are bullish, if you are bullish, cautious, or if you are cautious, bearish. Also, please leave a like and please subscribe to the channel if you haven't already done so. Again, we are coming up on the 1-year anniversary, and I was only able to make it through all the encouragement with everybody in the comment sections and keeping me going, because I really love doing this. It's really one of my favorite things to do in the day. But if there wasn't any support, if I was just shouting into an empty space, well, I probably wouldn't do it forever, because that is what encourages me, the community. So thank you guys so much, and I will see you in the next video.